How's it going, everyone? It's Sam. I want to talk to you today about a strategy for SPACs and for investing in these really high growth companies that I don't think too many people have thought about. There are a couple issues with investing in SPACs. First of all, there's a lot of uncertainty, whether it's the valuation, whether it's the management team, whether it's the companies that they're buying. It's hard to make a process that makes sense for every single SPAC because they're all so different. Second of all, they all have all these different dates. It's hard to keep track of. And third of all, you don't want to put all your money into one SPAC because, again, very high risk, high reward. So if you're wrong, you can lose out on a lot of money. But I think I came up with a strategy that is very interesting, could help speed up the process, could help make you a lot of money. And it is proven already. So it's a proven strategy. So I'll explain it. And this is a way that Ark Invest and Cathie have been able to invest to get massive gains. If you don't know who they are one of the most innovative ETF and mutual fund companies out there. Definitely stay through to the end because this is going to be something that you want to hear. Now, before we get into it, if you guys want to see me on Instagram, you can check out my page, My Financial Friend Official. It is linked down below, but I post on some different videos. I give you like a little teasers about videos that are coming, and I post some other stuff too. Definitely check that out. Also, if you want 4 free stocks through WeBull, definitely check out the link down below. You can get 4 free stocks worth up to $1,600 for a couple of them. So make sure you deposit $100 and you can get up to $37 overall. And if you want to know exactly what I'm buying and what I'm selling, you can definitely check out the link down below to Patreon. I update everyone there exactly when I buy a stock or sell a stock, how much, and we talk back and forth a little bit in there too. We have over 700 something Patreon members right now. It's insane. So definitely check out that link too. And if you don't mind hitting the like button and hitting subscribe, I really appreciate that too. So we are looking at SPACs today, and it's hard because we see something like APXT, right? Something that we're actually up on, but the thing is, it's a Microsoft cloud partner that's going to go public, high growth company. It's going into the cloud, which is a high growth area, and yet it's trading a little bit sideways. We can see it actually went down a little bit from its highs. We were lucky enough to get in a little bit earlier than this, but overall, it's been trading sideways mostly. Compare that to another company that I actually covered when it was $12. I covered it here, and we covered it yesterday too, but I didn't think this company was going to blow up this much, but it's at almost $30 a share. Now, how can we make sense of this? How can we pick these out for the future? Well, it's pretty difficult, again, because there's so many different management teams, there's so many different industries, there's so much going on. It would be nice if we had a strategy, especially because some people don't have the time like I do to take a look at all these companies and do this on a daily basis. But I think I came up with something. So I found this interesting article called Investors Ought to Buy All 6 Social Capital SPACs. Now, before you click off this is a really interesting strategy. First of all, you can see here that Social Capital Holdings Corporation 2, IPOD, is up 50% since the announcement on November 20 that they're going to merge with Opendoor. Now, this is a little bit old. They're up even more than that now. They are up to $22 a share from $10 a share. Now you might be thinking, oh, that's great, but what's the point of this now? They're already up so much. Well, the person that's behind this company has done this before with other companies, and he has 4 more on the market. This is the guy that's behind this, and I won't try saying his name because I can never pronounce it, but you can see here that he was an engineer, founder and CEO of Social Capital. He was an early senior executive at Facebook. He's a stakeholder and board member on the Golden State Warriors. He's a really bright guy, and he has said before that he wants to bring 26 of these SPACs public. Now, again, he's done this before. So while he has IPOB, and that's probably the one that most people know right now, he also was in Virgin Galactic, a company that has moved up about 200% throughout the year. You can see here on the year to date, or actually the 1 year, it went from $7.22 all the way up to almost 300% up on there. And then you can see too, he has other companies. He has IPOC, which is trading very low right now, almost at $10. And these companies have a hard time going under $10. It's possible, but they rarely do it. I was looking at a list of all the different SPACs this year, and I don't think one was under $10. Almost all of them, I think every single one that I saw was above $10. Now, again, this isn't necessarily always true, so approach this at your own risk, but this company is at about $10. You can also see IPOD.U, which is at $11, IPOE.U, is at $10.42, and then IPOF, which is at $10.30. And I should clear something up. The .u just means that they're units, so you can just look up IPOB, IPOC, IPOU, all those. You don't have to look up IPO whatever .u. You can just look up either or, so they're about the same. This is just meant to denote what they are. Now, again, he's got a proven track record, so I think that that is something that would make you feel really good as an investor because you're investing in the person, not necessarily the company at this point. Again, it's pretty speculative depending on how you believe about this because we don't know the companies that they're going after yet. We don't know what they're going to merge with. We don't know the type of deal that they're getting. We don't know the kind of cash flow. We don't know anything like that. But if you just look at proof of concept in the past, you can see that one company that he's bought into is up a significant amount, about 200 to 300%. The other company is up over 100%. These companies have not made their targets yet, but again, this would offer some diversification if you jumped in 4 different companies. And earlier I mentioned that Ark Invest is doing the same thing, and by that I mean they've been investing in both of the 2 companies so far that have been brought to market that are well known. For example, SPCE, they have a significant portion of. You can see here they have about $26 million, and they've been buying every day about $350,000. And they also have IPOB, and they have a lot more in this one. They have about $70 million. So a little bit more speculative on the SPCE side because it's Virgin Galactic. But with this one, it is a little bit easier to determine what they're looking at in the future, where they're going to go. So they've been buying a lot of this with about $70 million worth. So they're already buying up every single stock that's well known that's been announced from this CEO, from this guy. They will probably buy the next ones too if they're innovative. So it's interesting to see how they're approaching this. Now, again, the SPAC phase could decrease a little bit, the SPAC mania, but you're spreading your money over 4 different companies, all at pretty cheap valuations, or maybe not valuations, because we don't know what this company is going to be able to buy another company at. But we're trading at pretty cheap compared to SPACs. I mean, again, this is just a lump sum of money. But the thing is, it has a very hard time going under $10, especially once they announce what they're merging with. This is something that can offer you a pretty good return, and there's a lot of hype behind it. So if they don't make a decision, or even if you don't like the decision that they made for the company that they're going with, you can get back your $10. So it prevents a lot of downside risk. So I think that this could be a very good strategy to diversify and also have some major upside potential. Again, if we just did what we did with the last 2 stocks, we would be sitting around $25 a share on average, and we would have about a 150% gain from where we are now. I'm highly considering doing this. I just haven't quite decided how much I want to do that with and if it makes sense for me because I am saving for a house. But I think this is something that could be very valuable, spreads out the risk, has major upside, has proof of concept, and we have 4 different companies that could all be high growth companies. So between these 4 companies, they've raised about $2.8 billion. I think this could actually be really good, a really good investment, and I am definitely considering it. Now, again, approach at your own risk. I'm not a financial advisor, so do your own research. Make sure that you read up on these companies and read up on the CEO or the founder of these companies. I can put the link down below if you want to read this article. I think it's really interesting. And they say here that they think IPOB has the potential to go to $100. I do have IPOB. I also have Virgin Galactic. So I already have the first 2 companies. Maybe I'll just round it out with the next 4. So definitely consider this. Again, if you want to follow me on Instagram, I'll put the link down below along with the link to WeBull. Definitely check that out. I really appreciate it. And if you want to see the video that I made earlier today on some of the dividend stocks I'm buying, definitely check out this video here. Thank you guys so much. I appreciate it, and I will see you in this video.